Good morning, everybody, and welcome to today's Q&A session. I'm Rachel Nabers. With me this morning is Ilana Brown, and you are here for the Nabers Group and Solo 401k Q&A session. As we're getting started, we like to do a quick tech check. Let us know, can you see us? Can you hear us? You should see on this side of your screen, there's a chat bar flow thing. Just let us know, yes, I can see you. Yes, I can hear you. Awesome. Thank you. Oh my goodness. And already the comments are pouring in. Hey there, Gary and Mark and Bob and Randy and Hannah and Dolores and Joe and Madeline and JB. Awesome. Great. Okay. Oh, awesome. Hey, Clayton, cool, wonderful. Now, we open these Q&A sessions up to all solo401k.com clients and those of you who are thinking about opening a solo 401k for your business. The point of these Q&A sessions is we want to give you a place where you can come and have your questions answered and really feel supported on your financial journey. Now, before we get started, just a couple of housekeeping items. First of all, these sessions tend to be best if you can join us from a desktop. So if you're joining from from like a mobile phone, it's not always the best quality. If possible, join us from a desktop. If the video or audio gets funky at all during our session, usually that can be fixed by simply refreshing the page. And then finally, we already have close to 30 questions just pre-submitted. So we're going to get through these questions as quickly and as thoroughly as possible. If we don't get to your question today, we will get to your question on our next session. We have had such good feedback from you guys. This is something we want to do regularly. We're going to be doing these Q&As probably every week, maybe a couple of times a week. It's really helpful for our team to be able to answer these questions for you and to make sure that you are well supported in actually using your 401k plan. So, all right, we're going to go ahead and dive right in. The first question is from Randy. Randy says, I have a solo 401k, but I no longer have the Schedule C business. Do I need to close down the solo 401k? What are my options? And some additional info regarding having a solo 401k, but no longer having Schedule C business. This is also from Randy. The current solo 401k has some rental real estate. Would that need to be sold? And if I were to start another Schedule C business, could the old solo 401k be transferred to the new Schedule C business? A lot of good questions there. Ilana, what do you think?
Yeah, great question, Randy. So if you are not going to show any more self-employment income, you do have to close down your solo 401k. You do have some options, though. You can open up a self-directed IRA, and you could roll something such as your real estate assets into this self-directed IRA. We offer a self-directed IRA, so we will help you the entire way. Another option is that if you can come up with another business, we could easily update your plan documents. The IRS doesn't say how much your business needs to bring in. So if you can show some self-employment activity for another business, we can update your plan documents. You could keep your solo 401k just as is.
That's awesome. So just to reiterate that, Randy was saying, if I start another Schedule C business, could the old solo 401k be transferred to the new Schedule C business? And you're saying that that's a yes.
That's yes. Mm-hmm.
Awesome. Cool. And just so that you know, Randy, we do not charge anything to update the sponsoring business for your plan. So if you're going from old Schedule C to new Schedule C, just email our team, let us know you're updating your business, and we'll make that update for your plan documents complimentary. Cool. Thanks, Randy. Okay. Our next question comes from David. David says, how difficult would it be to transfer my solo 401k from Provident to a better trust entity? I feel trapped with Provident and Nevada corporate headquarters. Well, David, you're not alone in feeling trapped with some of the larger custodians. This is something that we've seen a lot over the years. These custodians were super grateful to them in paving the way for self-directed retirement plans. They were really, really important in the 1980s. It's 2021 now. So, retirement plans, they evolve just like laws and regulations and rules. They evolve over time. Retirement accounts have to evolve over time as well. And the original custodial model was the first foray into letting people have control of their own retirement funds. But since then, since 2001, actually, the solo 401k became an option for small business owners. And then in 2006, you could actually roll money in to a solo 401k plan. You couldn't do it previously. So really since 2006, which is when we brought the solo 401k to market, you've had a better option. You didn't know, that's okay. So let me speak to your question on how difficult is it to transfer the solo 401k from a custodian to us, essentially. The mechanics of it are really simple. You'll fill out a application on our website at solo401k.com. I'll give you the link to that here in the chat. So there's our application link. You'll just click the little button that says restatement. Give us a bit of information about your old plan, and then we swap your documents. That's really what's happening in a restatement, is swapping your documents. So Nabers Group becomes your plan provider instead of the old custodian. That's the mechanics of it. Transferring your assets may be a bit tedious. Think about it from the custodial perspective. They don't want to lose your money, so they don't feel especially motivated to give you your rollovers quickly. What we find is really helpful in working with these custodians is persistence. You have to be more stubborn than them. You are the squeaky wheel. Call them on a consistent basis, make sure your transfer is in progress. And now, I don't want to be too, down in the mouth about this, David. We have hundreds, if not thousands, of clients that have moved to us from other custodians, and they have no issues doing their rollovers. They just send the request is granted, the funds and the assets roll over to your new solo 401k with Nabers Group, and you're good. You're all done. But with these giant custodians who their whole business model is a bit old and slow, you do want to make sure that you're emotionally ready to be that squeaky wheel to get your money in your control. I think moving to a fully checkbook control, self-directed plan where you're in charge of your own money rather than having to go through a custodian middleman is an excellent path forward. So if you're considering that restatement, then fill out that application at solo401k.com and we'll be happy to see how we can help. All right, Tom, next question comes from Tom. Do the funds to pay the annual state and reporting fees, do the funds to pay the annual state reporting fees and registered agent fees from an IRA LLC need to come from the LLC bank account, or can they also come from the LLC manager's personal account? We would definitely recommend that they come from the LLC bank account if possible, because the LLC is an asset of your IRA. So it is an extension of your IRA. Therefore, those LLC filing fees, if possible, should be paid with the LLC fees or LLC funds, which are really from the IRA. Great question, Tom. Okay, next question comes from Angie. Do you want to read that, Ilana? Can you see it on your screen?
I can.
Okay,
so
go
from
for it.
Angie. Hi, thank you for doing this. I want to know if my company didn't end up making money in 2020, but my husband, who is a part of the solo 401k, but also has a full-time job that earned income, can still contribute towards our solo 401k. Some additional notes: I have a single member LLC. My husband and I are married and filed jointly, so he can contribute. So can he contribute into the solo 401k we just opened, or do I need to make him an owner of my LLC before he can contribute? Alrighty. Great question, Angie. And also, thank you so much, Angie, for posting that in our network. If anyone is not a part of our network, go to solo401k.net. It is a great place to learn and post questions. Alrighty, so the 401k contributions are based on earnings from the business. If your company didn't make any money in 2020, then you wouldn't be able to make the 2020 contributions to the solo 401k. So, and then funds earned from another employer cannot be contributed to the solo 401k plan. So as for including your spouse, you do not have to make him an owner, but that is an option, or you can pay him W-2 wages. We actually have a great blog post. Rachel, can you pull up the blog post on how to include your spouse? Awesome.
Absolutely. Okay, you should be able to see that. Can you see that now?
I can see it.
Awesome. We'll post that in the chat too, guys. This blog post will be really helpful for you.
Great. And you do always want to work with your CPA on how to pay your spouse. They'll definitely give you the right guidance on what the best way to do it is.
One other little add-on that I'll share, if you go to our network also, Angie, at solo401k.net, and you go to events and past, we'll link to this as well. As you can see, we've done tons of trainings and we continue to do a lot of ongoing trainings. We had one specifically about BAM, spousal inclusion in a solo 401k plan. We'll link that in the comments as well. This is an entire training that we did, Angie, all about bringing your spouse into the solo 401k, contributing those contributions. So that'll be helpful too. All right, next question.
Alrighty. From John, I would like to know if I can contribute to both a 401k and a Roth 401k at the same time, and if so, what are my limits? So a few things here, John. So your solo 401k, it comes with both traditional 401k contributions and Roth 401k contributions. So you can contribute to both of those. So I'm not sure if that is your question. And also, you know, you have two kinds of contributions. You have your employee contributions, which that can be traditional or Roth 401k contributions. And then you have your employer, which is going to be traditional contributions. So yes, you can make both contributions. And if you were, I'm not sure if you were talking about making IRA contributions at the same time. So just so everyone does know, if you do have an IRA outside of your solo 401k, you can continue to make IRA contributions because it's an individual retirement account, while the 401k is a business retirement account. So you still have the options to make both of those contributions as well.
Sweet. And just as a little helpful extra tip here for everyone, we'll put a link to our contribution calculator in the chat. That's at solo401k.com/calculator. That contribution calculator can be really helpful for you to plug in how much of your earnings you're making in your business. And then our calculator will also, you know, spit out what your projected contributions are. If you're a solo401k.com client and you log into your 401k dashboard, and I'll see if I can do this as well, we also have a Roth versus traditional contribution calculator. So let me see if I can share my screen here just for a moment. Oh, there's like 3 screens and it's trying to tell me which one to focus. All right, see if that works. So here's our 401k dashboard. For those of you who are clients, this is going to look very familiar. If you click on calculators, you see we have a Roth versus traditional calculator. So this is a great place, John, for you to be able to see how much you can contribute to both so that you're really maximizing your contributions to your plan. Anything else to add, Lon, or you think that's good?
That's great.
Cool. Thanks, John. Okay. Wonder if there's a way for me to... All right, now both of us are big again. Okay, next question comes from Marie. Marie says, is it better to fill out a form with Vanguard to roll over my existing 401k or to print and mail the paperwork for the rollover from the portal? Great question, Marie. I'm going to share my screen again. So my short answer is do both. Well, My pre-answer is call Vanguard. That'll save you a lot of time. If you call Vanguard, the easiest thing to let them know, Marie, is, hey, I'm rolling over from an old 401k to a new 401k. A lot of firms are not familiar with solo 401ks. And you might say, well, Rachel, Vanguard has its own solo 401k. How could they not be familiar with it? Well, I'm so glad that you asked. And isn't that silly that they're unfamiliar with it, even though they literally offer it themselves? There are thousands or tens of thousands of employees at Schwab, Fidelity, TD, Vanguard. They're giant organizations. Not all of them are going to be familiar with the intricacies of a solo 401k or even know what it is. So you might accidentally confuse someone when you're asking the Vanguard team member how to roll over to a solo 401k because they may never heard of it before. Keep things simple, Marie. Ask them, how do I roll over funds from an old 401k to a new 401k? And they may say, oh, you need to fill out our rollover forms. Or they'll say, actually, the new 401k administrator, which is you, or I should say, which is you, I covered the mic, the new 401k admin, which is you, will submit the rollover request. I think then that pre-phone call, Marie, is going to really help guide you on what Vanguard needs. If Vanguard says you need to submit their forms, it's still a good idea to create and submit the rollover form from your 401k dashboard. It looks like this. It's really easy. We have a little walkthrough training video here on exactly how to roll over, to complete this form. And then I've got a rollover request here right on our dashboard. So as you can see in this rollover request, we give Fidelity, Vanguard, Schwab, TD, whoever has your money now, we give them all of the information that they need to complete the transfer. And then that, video on this rollovers page tells you exactly how to fill out this form, which will then spit out this PDF for you. The reason why I bring that up is this couple of pages is really important. You want the releasing custodian, in this case Vanguard, to do what's called a direct rollover. This is also known as a trustee to trustee transfer. It means no taxes when they move money from one plan to another. And that's what you want. They do not need to withhold taxes. So our rollover documents are really clear. We give them instructions on how to create and complete the 1099-R, which they will send to the IRS. We give them instructions how to complete that form so that you are not paying taxes on that rollover. So to go back to your original question, Marie, if the question is, should I do Vanguard paperwork or Nabers group paperwork? In most instances, I'll say both. Call Vanguard, see what they would like to do, what they want you to do, but in most instances, do both. Oh, Joe, you're so great. Joe gave some great assistance here. Marie, check out Joe's message in the chat. He gave a direct phone number for their small business group. They were helpful for Joe. They understand third-party solo 401ks. Way to make it happen, team. Good job, Joe. That's awesome. Thank you so much for that helpful info, Joe. We really appreciate that. See, this is one of the reasons why our clients are the most awesomest of all time. So you rock, Joe, and you rock, Marie. Keep up the great work. All right, next question from Seema. Seema says, I have both a solo 401k and a Roth 401k. My question is, how can I give myself a loan from my retirement accounts with the lowest interest possible? And what are the terms of the loan in general? Will this loan affect in any way my retirement account? And then we've got some follow-up from Doug. Doug says, follow-up to this. I'm looking to borrow from my 401k as a down payment as a first-time home buyer. Congratulations, Doug. Currently, it is housed with the 401k funds are housed with a former employer, but I'm able to transfer to a solo 401k, no problem. The issue I'm having is the CARES Act lets you borrow up to 100%. Some people say it's still available, current law. Okay, we're going to tackle these in two chunks. So the first thing, Seema, you have one solo 401k with us, but it has two component parts, pre-tax and Roth. but it's under one 401k plan. That's important because the way that you calculate how much that you can take a loan from your 401k plan is based on your aggregate funds. It's not based on what's in the Roth or what's in the 401k. It's based on the aggregate funds. So you want your pre-tax and your Roth funds to be calculated as one 401k plan. Let's imagine you've got 500,000 in your solo 401k. Okay. So Seema, you got 500,000. Let's say, make it easy. You got 250 in your pre-tax bucket, 250,000 in your Roth bucket. Together you have 500,000. You can take a maximum of $50,000 from your solo 401k. That's what you can take. That's your maximum. Now, the interest rate is the prime rate plus 1%. And I'm going to share my screen again to take you through a couple of things here. So, on your 401k dashboard, Seema, if you click on loans, there is a helpful walkthrough video here. And then we also have your participant loan calculator. So you can use these sliders and set the loan amount, your loan terms, see how much your loan repayment is. That's a good starting point. And I think I have a loan document on here already. No. Well, I'll show you how quick it is to take it. Let's say I'm going to do the full $50,000 loan, and I'm going to take the full 5 years. Doug will come to your question about first-time home buyer in a moment. But Seema, for you, let's imagine you're just doing a normal loan. This is how quickly our software will do the loan paperwork for you. Oh, it's ready 3 seconds later. Okay, so now I'm going to go ahead and download that onto my computer, open up my loan documents. Now you'll see that we are going to give you some helpful tips on your participant loan. We've got FAQs here for you. And it is okay to create your loan paperwork, and it doesn't necessarily count unless you sign the paperwork and take out the money. So sometimes people will get a little bit concerned if they created the paperwork. They're afraid that that loan is now active. The loan is not active until you sign that paperwork and take out the money. So if you want to see what is included in your loan documents, you can do that. You can run a test loan on your 401k plan dashboard. So Seema, here you'll see the loan cover letter, the application. This is all pre-filled for you. You don't have to do anything here. And this is what I wanted to draw your attention to, Seema. This is the interest rate. Oh, it's not highlighting correctly. The interest rate is 4.25%. That's prime plus 1. The prime rate right now, if we go to what is the prime rate, 3.25%. Prime plus 1, 4.25%. Our software is going to automatically update this for you, so you don't have to worry about changing anything there. So when you're talking about what's the lowest interest possible, the lowest interest possible is prime plus 1. But one thing I want to bring to your attention, Seema, is that 100% of the loan, or excuse me, of the interest goes right back into your 401k plan. So the absolute tiniest amount of interest possible is not necessarily advantageous, because taking this participant loan is a way to get a little bit of extra money into your 401k plan, essentially tax-free. So that is how you calculate your participant loan amount. Use the loan generator on your 401k dashboard, and the interest rate is already built in for you. We actually have a training that we taught in the network all about solo 401k participant loans. I will link that here in the chat. Give me one moment. Participant, don't make me spell on the fly, spelling in public. Participant loan webinar. Bam. This is a great training for you to watch, Seema. We go over specifically the terms of the loan, who sets the interest, what happens if you pay back late, how can you refi, what if you want to do 2 loans, multiple loans over a multi-year period. We cover all of that in this training for you, Seema. So make sure you check out that, that participant loan webinar. Now, Doug, your question was specifically about the CARES Act. So I'm going to share my computer one more time, and we get this question a lot. Basically, what happened last year during the pandemic is loan IRS. During the pandemic, the IRS temporarily increased loan amounts from $50,000 to $100,000. Now, some people say that you can still take that loan now for $100,000, and we disagree because of this right here. So it says, loan limit may be increased. The CARES Act also permits employers to increase the maximum loan amount available to qualified individuals. Now, this is the part that gets you, Doug. For plan loans made to qualified individuals from March 27th, 2020 to September 22nd, 2020, the limit may be increased to either $100,000 or their vested benefits, which for a solo 401k, you're 100% vested. So this is the really important deadline, Doug, that I think a lot of people overlook. The IRS has not formally extended the CARES Act double limit loan. So we talk to the IRS and the Department of Labor all the time. They have not formally extended this. So our loan documents for you as a client are going to follow the current IRS rules for $50,000 or 50% of your account value. Great questions, Seema and Doug. Thank you for that. Okay, next question comes from Tom. I use an IRA LLC to invest in crypto. My Roth IRA acquired the initial membership units of the LLC in 2019, and those funds are fully invested. Whoop, hold on. It went away for a second. I lost my place in the questions. Okay, I got it. I'm back. Tom, I use an IRA LLC to invest in crypto. My Roth IRA acquired the initial membership units of the LLC in 2019, and those funds are fully invested. I'd like to add funds. What is the process for establishing additional LLC membership units for acquisition by my Roth IRA? Great question, Tom. You don't need any additional membership units. Your IRA is able to continue investing funds into the LLC with the current operating agreement that you have. Okay, next question. Tracy, Ilana, you want to read this one?
Yep. When transferring funds into a 401k, my form created as the funds being mailed to my personal house, written to my trust. Is that correct? And then I mobile deposit it in my trust account, correct? Yes, Tracy. That's what we find typically is that your releasing custodian is going to mail you the check. It always has to be in the trust name. Once in a while, they'll transfer the funds, but that's what we see typically. And yeah, just use your mobile app. Sometimes if the check is too large, which is great, you just want to call up your bank and have them just up the limit or just release it, and you could deposit that check right in your mobile app.
Awesome. Cool. Next question comes from Bill. What are the steps to adding my spouse to the solo 401k? Great question, Bill. And do make sure you check out in the chat up a little bit. We've got that link to spousal inclusion in a solo 401k. Bill, if your spouse works in your business with you, then your spouse can participate in the company retirement plan. Adding your spouse to your plan is literally as simple as just email us. Send an email to support@solo401k.com. Let us know you would like to add your spouse to the plan. You want to determine if you want your spouse to be a participant or a trustee. Those are different. If you search our knowledge base at support.solo401k.com, and I'll show you how to do that search when we come to the end of our call today so that everybody has the knowledge of how to search through the knowledge base. Then you'll see that there's also an article that specifically talks about the difference between a participant and a trustee. So Bill, send us an email. Let us know, I want to add my spouse as a co-trustee and a co-participant or just a co-participant. And then we'll get the documents updated for you. That update is complimentary. Thanks, Bill. All right. You got this one,
John? Yep. Mm-hmm. If one uses Nabers, does solo401k.com assist with tax forms like EZ 5500? If so, is it free or is there a charge? We absolutely help you with Form 5500 EZ. You'll just log into your dashboard, and I think Rachel's going to actually pull it up, and it is complimentary. It's included with your $99 annual fee.
So yeah, click on, once you're logged in, click on Forms and then click on 5500 Easy.
And we do remind, we actually just started sending out emails now. This is not due till July 31st, but we want to make sure that everyone gets it done in time. And you just answer those questions. We'll generate the form for you, and you just have to mail it in. So very, very easy. There is an e-file this year, and we do have instructions on that as well. This is the first time that they're doing it that way. So you can do either mail it in or e-file.
Awesome. Thanks. Great question, John. Okay, the next question, and we are humming along. You guys are rocking it with these questions. I love it. You're doing so good. Okay, next question from Manny. This one I think is for you, Lon.
Yep.
If I've always been on W-2 and moved employers and I have IRA funds, can I qualify for a solo 401k?
So in order to qualify for the solo 401k, you do have to have that self-employment activity. You have to have that active earned income. And then you as the business owner cannot have any full-time W-2 employees. So as long as you meet the qualifications, then you can have a solo 401k.
And next question from Manny.
Okay. That's me. If I have a regular IRA and I would like to move them Roth IRA for future tax saving perspectives, what would you suggest? Well, we do not give out tax advice, but something to always keep in mind is if you are going to do that conversion, you are paying taxes on that, but it's all, based on what you want, your investment strategy, your retirement goal. So definitely something you want to work with your CPA. And I just know just from talking to a lot of clients that, maybe a year that they're not showing that much earned income is a great year to, convert those funds because you don't mind paying the taxes if you're not paying as much as previous years.
Awesome. Next question is anonymous. Do you offer any advice or directions on how to utilize services such as Ameritrade, Schwab, et cetera, to invest in ETFs? Yes, we do. And I'll also take this opportunity to share with you a bit about how to search our knowledge base. So if you are either on our website at solo401k.com, or if you're on your 401k dashboard, then clicking on the support link is going to take you right to our knowledge base. So you can get there from both places. Anytime you click the support link, that's going to take you to our knowledge base. Our knowledge base is at support.solo401k.com. And I'll put this in to the chat as well. Okay, so this is our knowledge base. There's hundreds of articles in here. So what you might want to do here is just type in, for example, brokerage, press enter, and then you'll see a lot of different articles all about brokerage accounts. Specifically, I think for you, anonymous questioner, this article is going to be really helpful. How do I open a brokerage account with my solo 401k? And we go through all of the different types of brokerage firms. There's, of course, some that are not listed here, but we give pretty comprehensive guides on exactly how to open those types of accounts. We also even walk you through with pictures what type of account you need to open and how to complete those applications, what to put in section 1, 2, 3, 4, so that you really have a step-by-step guide on exactly what you need to do to get the right type of account open. So yes, we absolutely offer support, directions, and guides on how to open brokerage accounts for your 401k plan. All right. Next question comes from Clayton. Aloha, Clayton. I've been receiving distributions from investments going directly into my solo 401k. Beautiful. As the funds accumulate, are there any liquid investments available rather than sitting idly in my bank account until my next investment opportunity becomes available? Great question, Clayton. So, of course, as you know, Nabers Group is not your investment advisor. We do not give tax, legal, or investment advice. We are your IRS plan document provider. We're your paperwork people, and we're also your cheerleading team, emotional support team, rollover support team, but we're not actually telling you what to invest in. So, anything that I share from this point forward is really just, between buddies from one investor to another. I think if you're looking for things that are highly liquid, then that people have different liquidity time horizons. If you are a real estate investor, for example, Clayton, and you like the real estate space, then maybe shorter term notes, 90-day, 120-day notes, mortgage notes, unsecured notes, promissory notes, secured notes may be a path to consider. Or even some short-term lending, private lending is a possibility. Tax liens also have a liquidity horizon of anywhere from 3 to 6 months. So I think first determining what your threshold or timeline is that you're wanting those assets to be liquid is the first step. But if you're a real estate investor, you're into alternative assets, then notes and tax liens can be nice for, a shorter time horizon on the investment. Of course, there's also stocks, bonds, and mutual funds. Those are absolutely available to you. They have incredible liquidity because you can buy and sell them at any time. Gold and silver similarly are very liquid assets. Those can be purchased and sold at any time. As you all know, we love crypto. We love Bitcoin. Now, Bitcoin is liquid. You can buy and sell at any time. But I think what you'll find is that once you start buying it, you don't want to sell it. So that's why I didn't come right out and say you could definitely get Bitcoin. It's super liquid. It is. You can buy and sell it at any time. But Bitcoin, and I think, is one of those very special assets that once you bring it into your portfolio, it has the potential for such asymmetric upside that you'll find that you want to keep it. But it is liquid. So Bitcoin, crypto, stocks, bonds, funds. On the real estate side, maybe tax liens and notes are going to have a shorter time horizon. And even things like gold and silver are liquid investments for your consideration. And always talk to a professional who can guide you, not just a couple of fabulous people on a webinar. Okay. Next question is from Andrew. Andrew says, if my balance is over $250,000, do I have to file both a 5500 EZ and a Form 5498? No, you do not. IRS 5498, I'll pull it up for you here. Well, I'll just put it in the chat. You can see the IRS page if you want to by clicking on that link. 5498s are for documenting contributions to an IRA. So they are not applicable to a solo 401k plan, and they're not applicable with regards to telling the IRS how much you have in your plan. So if your balance is over 250, Andrew, make sure you file the 5500 EZ by July 31st. Use the 5500 EZ generator on your solo401k.com dashboard. Okay, next question from Nitin. I have 2 CARES Act distribution checks, one for Roth, one for traditional. So I think, Nitin, you're talking about you did a CARES Act distribution from another retirement plan. And your questions are, can I just mail the checks to you so they can be deposited directly into my solo 401k accounts for rollover? No, don't send any money to us. We do not handle your funds. We are not your bank. We are not a brokerage firm. We never handle your assets. If you've got these CARES Act distribution checks, Nitin, then you need to deposit those into your 401k trust bank or brokerage account. If you need help opening those 401k trust bank or brokerage accounts, make sure you go to our knowledge base at support.solo401k.com. We are your IRS plan document provider. We do not handle funds for you. Do not send contributions to us. Do not send rollovers to us. We'll kick it right back to you, and then all you'll have is delays. So open your bank account or brokerage account for your 401k. In this case, Nitin, I would say open one bank account for your pre-tax money, one bank account for your Roth 401k funds, and deposit the pre-tax CARES Act distribution check in the pre-tax bucket, and the Roth 401k CARES Act distribution into the Roth bucket or the Roth bank account. Question 2. If not, do I deposit them into my company account and then mail a check from the business? Still no. You still want to do the bank account or brokerage account specifically for your 401k trust. Question 3. If neither of the above, do I deposit checks into my personal account and then mail a check from my personal account? Still no. You want to open a bank account or a brokerage account specifically for your 401k and then deposit those distribution checks directly into your 401k. It's okay if you put them in your personal account. That's not the end of the world. These distributions are probably going to be treated as an indirect rollover from the IRS. If your brain is swimming at what is an indirect rollover, use our knowledge base. We have a whole article exactly on indirect rollovers. So Natine, if you don't have a bank account open for your 401k trust yet, it's okay to deposit those funds into your personal bank account and then move them into your 401k trust bank account. But in order for that CARES Act distribution to be legitimate, that is, no taxes owed, those funds have to end up in your solo 401k trust bank or brokerage account. That's where they have to end up. They have to end up in a bank account or a brokerage account connected to a retirement plan in order to avoid a taxable distribution. Great question, Natine. I'm glad you brought that up. I know people are starting to pay back their CARES Act distributions or moving funds around. Okay, I think Lon, this one is for you.
Yeah. So would one be able to invest in real estate in the international markets through their solo 401k? Absolutely. Rachel, do you have any examples or more information about international investing?
Yeah, I do. I'm glad that you brought that up, Lon. So JB, yeah, you can totally invest international. That's fine. The thing you need to keep in mind is the assets should be titled in the name of your 401k trust or through your special purpose LLC. If you've had us set one up for you or if your attorney filed one for you. Now, I know one of our clients in particular, she has purchased a lot of properties in Spain, and they did not allow a U.S. trust to purchase the property in the name of the trust. So she worked with an attorney in Spain to create essentially the Spanish equivalent of their LLC, and her U.S. trust was the sole member of that LLC. So it kind of became like an international 401k LLC. I've had other clients that have purchased property in India, and they have followed a similar structure. Some important takeaways here, JB. Let's assume you're able to title the property in the name of the trust, even for the international holdings. You need to figure out how those rental income deposits are going to get to you. If it's allowable for you to give the offshore property manager, title company, whoever is running the property, if they will allow you to give them a US-based bank account for rental deposits, do that. That's the simplest structure. Your 401k trust buys the property offshore, but you've got your onshore bank account and the rental income just gets deposited into your onshore bank account. There may be currency exchange fees, things like that, but that's the simplest structure. That's also the structure that's probably the most rare because international offshore holdings tend to be a bit more complex. So what I will say, JB, is yes, you can invest in real estate in international markets. Check and see if they'll allow you to buy in the name of your 401k trust. Check and see if they'll let you have the rental deposits come to a US-based trust bank account. If they don't allow these two things, you definitely want to get an attorney, specifically someone with boots on the ground offshore, to help make sure you are structuring the deal properly. Great question, JB. Lon, you want to take the next one?
Yep. So from SJ, if my business has a loss this year, can it still sponsor the solo 401k? So the IRS is understanding, your business may not show an income every single year. What we've seen is 1 to 3 years. So if you're going to go beyond 3 years of not showing that income, you probably do want to close your solo 401k down.
Yeah, I would agree with that. Or maybe not just 1 year, but like a couple of years. Definitely, if you've got several years of no income, then I think that can, or showing loss after loss after loss year after year, I think that can specifically be a bit of a red flag. I actually was talking to a friend the other day who does some audit work with the IRS, and they were saying that if the IRS ever was going to audit a solo 401k, which is very rare, but if they were going to do it, having a business with loss after loss after loss, but then you're still doing these fabulous investments would probably be what triggers them. So keep your business legit. Let that business make money. Then that business has a retirement plan. Okay, Jason says, I recently set up bank accounts for my solo 401k for my wife and myself. Awesome. My question is, when setting up other accounts with other exchanges, brokerage accounts, neobanks, etc., should I set up all accounts separate with 2 accounts at every site, even though it will be under the same trust? So for example, 2 accounts at Coinbase under the same trust, one for me and one for my wife. Have you tried to perform this with any brokerages without any problems? Good question, Jason. I will humbly defer to your tax accountant to give you the official answer here. I think that the unofficial, this is not tax advice answer for you is, it depends on how good you are at keeping records. At the very least, I think having those 2 bank accounts, one for you and one for your spouse, is really important, because when the money comes in, you need to be able to document to the IRS, if they ever asked, who do those funds belong to. In a perfect world, you would continue that logic all the way down onto the brokerage accounts and assets as well. So you would have a Coinbase account for you because you're one participant in a 401k plan. You would have a Coinbase account for your spouse because they're another participant in the 401k plan. Does it happen that way in reality? Not always. But if you have one Coinbase account for both of you, you need to keep excellent records. You need to know exactly what you wired in from your bank account that's your 401k funds. Your spouse needs to know exactly what they wired in from their bank account for their solo 401k funds, and you need to keep that transaction history very clean as well. So if you're looking at your Coinbase account and you've got 2 Bitcoin in there, you need to be able to trace what they call the provenance, the authenticity, the origin of those Bitcoin. Did they come from, you bought one and your spouse bought one? Did you buy 1.75 and your spouse bought 0.25? You need to have that clear history for all of the assets and transactions in your 401k plan. Good question, Jason. Love it. Okay. Next question comes from Bob. Bob says, what is the best way to find an accountant or a CPA who understands a small business and their needs? I love this question, Bob. You're great. So what I'm going to do is share my screen with you, and I'm going to take you right back into our knowledge base. Where is that? Okay, and I'm going to type in here CPA. And we've got a solo 401k literate CPA list, Bob. Here is how you find CPAs that know about solo 401ks and small business owners. In particular, Angela Snyder, the taxonista, is awesome. Nate Bush is awesome. We've taught trainings with both of them on various topics. They're really good resources. Watson Group, WCG, they're awesome. Robert Hall, they're good firms. They're all over the country and they have clients in all 50 states. So Bob, you do not need a CPA just in your state. I personally work with a tax accountant who does not live in my state, and we do just fine. So that's going to be good for you. Okay, and then your next question, Bob, is when should I invest in real estate with my solo-directed IRA, which you might be talking about a self-directed IRA or a 401k, versus my personal account, maximizing tax benefits? This is going to be a great question for you to discuss with one of those tax professionals. I'll give you sort of my non-official from one buddy investor to another take on this, which is if your funds allow it, do both. I think it's great to have diversification in your tax classification. So I own real estate personally outside of my retirement account where I can access and use that income if I want to. I also have properties that are owned by the solo 401k, where they're just meant to bring in a cash flow income stream so that my 401k continues to grow. I think that which structure works best for you is very personal. So you want to talk to your accountant about that and see what makes the most sense for you. Thanks, Bob. Okay, next question comes from Mark. My payroll company allows me to include a deduction when I pay myself for the solo 401k. However, when I do that, the net check excludes the amount of the deduction. Should I transfer the amount of the solo 401k deduction to my personal account and then transfer it to the Solera trust account, or should I transfer it from the business account to my Solera trust account? Good question. If this is a salary deferral, then that means think about money coming at you from your business, and then it takes a left turn and goes into your 401k instead of going into your personal bank account. So I think that the answer is you can probably do either. The funds can come from your business bank account into the solo 401k as earmarked as employee deferral, or they can come paid to you as payroll and then get moved into your 401k bank account at Solera. Good question, Mark. All right, next question comes from John. And we are coming up on just about 10 more minutes here. I know there's a ton of new questions, you guys. If we don't get to them today, we will do another Q&A next week. Maybe we'll start doing a couple a week to try to get through some of these questions faster and faster. So we're going to hammer through as many of these as we can in the next 10 or 15. So John asks, as a sole proprietor with no legal entity registered, I'm a one-man show. If we open the solo 401k in April of 2021, can we still contribute for 2020 as both employee and employer, or is it only employer? This is specific to a sole prop with no legal entity. You can do it now for both employee and employer. And I'll share my screen real quick. Then you guys can jump around in the network. Bam, in the network, go to events, go to past. And there's two events in particular that I think will be really helpful for you in this situation, John. We actually just taught these this year. So the Secure Act, which we taught in January, this is with CPA Nate Bush. We talk about specifically how to make 2020 contributions in 2021. And then also we did another training with John Heyer. He is a rock star attorney accountant, and it was all about how to make 2020 contributions in 2021. Even for employees and employers, even for sole props. So check that out, John. I think that those two trainings are going to be really helpful for you. All right, next, Joe. Hi, Rachel. Hi, Joe. I'm a sole proprietor. I want to make both profit sharing and voluntary after-tax contributions to a solo 401k. How much can I contribute to the profit sharing bucket of my solo 401k? How do I calculate that amount? How much can I contribute as a voluntary after-tax contribution? How do I calculate that? Trying to determine the nuances of net profit and subtracting out 1/2 of self-employment tax. Joe, check out our contribution calculator at solo401k.com/calculator. Keep in mind, it's not going to include voluntary after-tax contributions. Voluntary after-tax contributions are dollar for dollar. They can be 100% of your net compensation. That is net of self-employment tax, up to the full 57 grand for 2020 or 58 grand for 2021. Profit sharing can be 20 to 25% of your profits paid to you as compensation based on your structure of your business. The Solo 401k contribution calculator at solo401k.com/calculator is going to walk you through the numbers, at least for employee and profit sharing. The voluntary after-tax contribution, again, can be dollar for dollar, 100% up to that max. Just don't go over the total of 57 grand for 2020 or 58 grand for 2021. Keep in mind, guys, right now, if you go to the contribution calculator at solo401k.com/calculator, it's assuming 2020 numbers. That's because we're still setting up 2020 plans, and you can still make 2020 contributions. By the tax deadline, May 17th, we'll have the 2021 calculator up. We'll probably have it sooner and put it on a different page for you guys. But for right now, that's the 2020 calculator. So, Joe, if you're looking for 2021 calculations, you just want to adjust that slightly. But that contribution calculator is going to be really helpful for you. All right. Next question. All right, these are the new questions that we've got from today. And oh my gosh, there's still 15 more. We're going to try to hammer through these as fast as possible. And Lon, just jump in and tell me to be quiet if you want to handle any of these. So Anna says, if my business for the solo 401k is a sole proprietorship at the beginning, but later changes to an LLC, what's the process to change all the solo 401k documents? Do you help me make the necessary changes? What's the fee, or do I have to do it? Lon, how about you take this one?
Yeah, there's no fee. Just reach out to us, and then we'll just have a list of questions for you. We'll ask you about your new business structure, the new EIN, and there's about 6 or 7 questions. We'll update it for free, unless you are changing to a multi-owner business, and that is, there's a lot more work involved. But if you're just changing to a single member LLC or just an S corp, let us know. Very easy, no charge.
Awesome. Thanks, Annalie. Appreciate that. Okay. Jenny says, to buy Bitcoin or Ether at Gemini, how do I open an account using the Solo 401k Trust with them? Do I go through their institutional account department? Yes, you do. We currently have guides for Coinbase and Kraken. We're working on a Gemini guide. You may know that we have a registered investment advisory at Nabers Wealth. We use Gemini as one of our custodians there, so we have a very close working relationship with them on the wealth management side. So we are preparing that guide for you guys to make opening the Gemini account easy. But yes, you're right, Jenny. You're going to go through their institutional account department, open the account in the name of your 401k trust. All right, next question is from Rupesh. I noticed the IRS mentioned there's no need to file some document if I transfer over $250,000 into the solo 401k from a normal 401k, but it looks like there isn't any limit how much I can transfer from the 401k to a solo 401k. I'm not sure of this question, Rupesh, but transfers are unlimited. There's no limit on how much you can transfer into or out of a solo 401k. Remember, if you look in the tax code, there's nothing that says solo 401k in the tax code. It's just a 401k. Shrunk down small for your business. Solo 401ks follow the same rules as a normal 401k. Rollovers in and out of a solo 401k or a normal 401k are not restricted by the IRS. They would only maybe be restricted by like your current employer saying you can't move money out while you work there, but that's not a dollar amount restriction. So Rupesh, I think maybe there was a bit of confusion. There is no limit on how much you can roll in and out. Now, if you have $250,000 or more in assets in your solo 401k, so let's say you transfer over 250 grand from an old 401k, you have to file IRS form 5500 EZ. Use our 5500 EZ generator. That's going to make things super easy for you. Good question, Rupesh. All right, Shankar, is it possible or beneficial to do a mega backdoor Roth 401k from the solo 401k you created? Yes, possible. No problem. Maybe beneficial. Ask your tax accountant. It's quite an advanced strategy. It's got a lot of moving parts. If you're going to do the mega backdoor Roth, you definitely want one of your accountant or one of the ones from our list to be looking over your shoulder and helping you out. But this is automatically built right into your 401k plan. Okay, Heath. As a sole proprietor, is it necessary to have different bank accounts? I have some income from rental properties and other from 1099. How do I need to handle employee and employer contributions? So how you run your business is your business. So, sorry, these are retirement accounts, folks. We've got to make some jokes every once in a while. So even if it's only Ilana that's laughing, I hope some of you are also laughing at home, even if it's kind of like one of those groan laughs. But hey, it's retirement plans. We got to keep it interesting where we can. So how you run your business is your business, Heath. You might decide to have one bank account for your active income, one for your rentals. That's really a question for your tax preparer. But how you handle employee and employer contributions, if you're a 1099 contractor, all that money is going into your business bank account or your personal bank account. You then determine how much you can contribute and move those funds from that business or personal bank account into your 401k bank account. We have contribution forms as well. You can find those on your 401k dashboard under forms so that you can fill that out, hand it to your accountant. It's a nice way to document the contribution for your tax deduction. Okay. Bandy has a question. What is the best way to roll over from a solo 401k into an IRA, then a Roth IRA? I'd say do this as a two-stepper. So rolling over money from a solo 401k to an IRA is easy. Literally, Bradford, all you'll need to do is send a wire from your 401k trust bank account to the IRA, whoever has it. And then depending on where you've got the IRA, they'll probably help you do a Roth conversion. Most custodians, Schwab, TD, Fidelity, normal brokerage houses like that, they'll do the Roth conversion for you. So send the wire, Bandy, from the 401k bank account to the IRA, and then have the IRA custodian help you with the Roth conversion. All right, Rupesh. I'm going to do a couple more of these questions. Oh, we're going to do it. So if I took out 100 grand last year from the 401k using a CARES Act withdrawal, can I return that 100K to the solo 401k within 3 years so the IRS doesn't tax that withdrawal? Yes, you can. Use the CARES Act repayment form. We have it on the 401k dashboard. Talk to your accountant. It's probably going to be considered an indirect rollover. So talk to your accountant to make sure you're charting everything correctly. But yes, you can. Now, here's a reality check, guys. The pandemic threw everyone for a loop, including the IRS. They were so freaked out that they gave us unprecedented, I know, aren't you tired of hearing that word after 2020, but it's true. They gave us unprecedented access to our 401k money when we never had it before. They said, sure, you can take a whole bunch more out in a loan. You can take some money out, put it back in a few years. They were so freaked out that they were trying to open up whatever parameters possible. We have, that will be released in April or May, we have our 2021 document provision update coming for all of our 401k clients. We've got some updates to the adoption agreement. We've got a new in-plan Roth conversion amendment for you guys, and we have a Secure Act amendment for you guys. You'll notice I said nothing about a CARES Act amendment because the IRS has released nothing yet. In their defense, they're trying to figure out what to do in the middle of a pandemic for 350 million people. They had to let people have access to their retirement accounts because people were really in a bad way last year economically. So it was sort of a ready, fire, aim situation with the CARES Act, where the IRS and Congress essentially said, just let them have their money, we'll figure it out later. So that's what's happening right now. Rupesh, we're not sure how the IRS is going to want you to chart these repayments back into the 401k. We think it's probably like an indirect rollover. But that's why I wanted to let you know, yes, you can put the money back within the 3 years. The IRS should not tax it, but you definitely want to double check with your accountant on that. Okay. All right, so now our next question, let's see here. Donald, when evaluating the real property assets in the solo 401k, is the property tax value or is it based on comps for the 5,500 filings? This is a really good question. I think accountants argue about this. You definitely shouldn't need to do a full-blown appraisal. Sometimes people will do a BPO. That's a broker price opinion. Sometimes people just do their tax assessor values or look at comps. Usually tax assessor values are lower. So comps might give you a little bit more of a boost as far as showing the real value of the 401k assets. But I think the big takeaway here, Donald, is the 5,500 easy is not a tax return. It's just information for the IRS. So if you're demonstrating in good faith what you think that they should be as far as the value of the plan, then you're probably okay. Talk to your accountant. Okay, Jason. Lon, do you want to take this one?
Sure. Question regarding ownership of my 401k trust for my wife and I. What percentage do I own and what percentage does my wife own? You're both participants on the plan, but you make your own contributions. So you guys technically own your own contributions, because when it's time for distributions, you'll be taking your funds out of there.
Exactly right. Yeah, that's totally that. You're right on about that. So Jason, if you put in, let's say, just to make super simple numbers, let's say there's $100 in the trust and it's 100%, right? That's 100% of the assets. If you put in $40 as a contribution and your wife rolled over $60, then she owns 60%. And it's not that there's ownership of the trust per se. It's exactly what Ilana was talking about. You each own your participant account, and those are sort of nested under that parent trust. Okay, I think we'll try to do maybe one or two more. Let's see here. Okay, Doreen, I'm getting ready to do my taxes for 2020. I opened the solo 401k and rolled money in 2020. Are there any IRS documents I need for opening or rolling over funds to do my taxes? Lon, any taxes on tax? Do you have to put rollovers on your tax return?
Well, your release and custodian will do that 1099-R for you. You'll get that in the mail, so you'll want to look at it and make sure it does say 0. My CPA did want a copy of my 1099-R, I think, just to double check it, but technically you don't have to, I don't think, because the release and custodian does it. Rachel?
Yeah, you don't have to. You don't have to. And I think the bigger takeaway also, Doreen, is whenever you roll money in, as long as your released and custodian did it the right way, which means, like Ilana was saying, it's showing $0 as your taxable amount. As long as that's 0, then you don't have to list a rollover on your tax return. Rolling over money from one retirement plan to another is not a taxable event. The IRS does not expect taxes if the money went right from one 401k or IRA to your solo 401k. Now, if you did not follow our instructions, if you did an indirect rollover, if the money came to you personally and then you put it into the 401k, or if the release and custodian messed up, then you will need to show that on your tax return. And we've talked about this so many times, actually. Let me just go ahead and share my screen one more time. And I'm going to show you guys that indirect rollover. We've talked about this also on our blog. So here's our website, solo401k.com. If you click on this little magnifying glass here, you can search. So I'm just going to search for indirect. And you will see what's an indirect rollover, how should I do it, how to document an indirect rollover. We've got lots of info here. I'll just go ahead and bring this one up and post it in the chat. Doreen, if for some reason you did not follow our instructions on your rollover request, and if the custodian instead said, hey, this is all taxable, but you got 60 days to put it in a new retirement plan, then you will need to document that on your tax return. If you followed, oh good, Doreen says, I think I followed your rollover instructions to a T, so I think I'm good to go. Awesome. A good way to double check that, Doreen, is, as Ilana mentioned, if the 1099-R looks like the sample copy we give you in the rollover request form, and if the rollover check was payable to your 401k trust, then you should be golden. Sweet. All right, we'll do one more question, and then I'm going to go over a little bit of housekeeping about showing you guys how to get to some stuff, and then we'll call it for the day. So JB says, does the IRS still let us take money out of the 401k this year for someone impacted by the pandemic? And how much can be taken? Any updates to the CARES Act regarding this? Great question. As far as my understanding, I know it was kind of stalled in Congress. I think Biden brought it up, but I don't think anything is passed yet to extend the CARES Act. So from my understanding, according to what's on the IRS website now, and according to the regulators that we've talked to, the CARES Act distributions stopped on December 31st. The CARES Act loans at the higher amount stopped on September 22nd. I am not aware of any extensions to the CARES Act distributions or loans. I talk to the IRS fairly regularly, so if you guys have some super secret Illuminati knowledge that I don't know about, and there's something that we missed, let us know. We are happy to be wrong about something like that if the IRS is going to let us have access to our money more. But our understanding is that those CARES Act distributions ended on December 31st. So that's the update here. Okay, so that is all the time that we have for today, guys. Before we call it, I just want to share my screen and take you through a couple of helpful housekeeping tips that I think will really be of value to you. So if you're not already on there, this is our network at solo401k.net. There are hundreds and hundreds of clients and new self-directed investors that are on our network all day, every day, posting fabulous questions, getting answers from experts, sharing information with each other. You can also find our past events here too. So, and this is free to join, free for anyone. The solo401k.net. Lon, can you post in the chat network:/solo401k.net, the HTTPS, so that way people have an easy link to it.
Mm-hmm.
So that's the Solo 401k network. And then if you join for free, and then you can access our events by clicking on events on the left-hand side of the page. Click on past, and you'll be able to see all of the trainings that we have done. We've covered a lot of different topics: real estate, participant loans, life insurance, having CPAs on there, making 2020 contributions in 2021, including your spouse, farmland, real estate loans. All kinds of stuff is in here for you guys. So this is a fabulous resource for you for getting trainings in the past. You also can get a quick link to your Solo 401k dashboard right here if by clicking on your Solo 401k. So the network is fabulous for connecting with other investors and also posting any questions that you might have. If you're in your 401k dashboard, let's see if this will let me stay logged in. Awesome. If you're in your 401k dashboard, remember clicking on the support link will take you right to our knowledge base. Ilana, how about put in their knowledge base, support.solo401k.com. And remember, guys, this search bar is a great way to look for pretty much anything. So let's say I want to find out about Schwab. I'll type in Schwab and then get articles that are going to be relevant to that situation. In your 401k dashboard, you can also link to the network right here at solo401k.net. And then from our website, this little magnifying glass is a great way to search for different blog posts and things like, just like you saw we do with Indirect Rollover. And that's at our website at solo401k.com. So there are lots of ways for you to get help and support, even in between our office hour Q&A sessions. And we just really enjoy doing these for you. We love our clients. You guys are amazing. You're smart. You're intelligent. You're forward thinking. You're ambitious. You're independent thinkers. And we really appreciate that about you. And we just want to be here to support you and help you continue to move towards even greater successes. So thank you so much for joining us today. Ilana, thank you for joining me as well. You guys, Ilana is fabulous. We're going to have her on these Q&As with us a whole bunch more. We are adding new team members to Nabers Group. We are growing. So welcome to our new team members. And we'll keep doing these Q&A office hour sessions for you guys. We love being here with you. We'll send you, for those of you who need it, we'll make sure you have the replay. We'll send out the replay to you. Have an awesome rest of your day, everyone. We'll see you on the next session.